March 16th, 2026. Here is the past 3 years in the S&P on a weekly chart. And then if we look at what's going on right now in the world, we are here, which is a slight downtrend. And if you look, we're getting close to this 200-day moving average. Haven't touched it yet. And we've broken under rather my favorite moving average, which is the 84 EMA. And as you can see, we are in a downtrend right now. We had some fighting come back in the market today. You're going to see that from the price action. The price action today was absolutely ridiculous. A perfect zigzag occurred. But anyway, look at the momentum. We've been in the red on SPY. And now we just had a first dramatic pop to the upside with some buying pressure. We're going to look at the NASDAQ now and just compare. So on the NASDAQ, we have finally fallen into red territory and momentum. And we have officially broken through the 200. So the daily bias is now going to be towards the downside from here on out until those signals reverse. But either way, we had an up day today in terms of buyers stepping in. What do I mean? Look at this zigzag. Look at the price action. It's a 2-minute chart. Look at this. That's almost comical. Yellow lines are the trades that I took. This yellow denotes when some Federal Reserve data started coming out, and we had a huge spike right here. After the Federal Reserve data started to come out, press releases and things like this, look what happened. Look at this volume confluence. Look at this. See? That's the reason for these events. And it doesn't mean they're always just going to continue shooting up if you have a huge candle. Some days, you'll have something just like this. We shot up right when the news started dropping. And then what happens? What do you see right here? What do you see? These vertical lines are trades that I would have taken or other. Ignore those. I'm talking about, what do you see right here? Our price action hit the previous market day's high for the first time today and immediately reject. What is that telling you? Okay, just take that into your knowledge bank. We had a volume confluence today because of the Federal Reserve data. I encourage you to look that up on your own time, obviously. We had this reaction in the market. It hit previous market day's high. And what do you see? All right, let's go over the trades I took today. Now, the first trade happened here on a 1-minute chart because I use a 1-minute chart in the beginning of the market. And why did I take this trade? Because notice the 15-minute is not going down anymore. It's going up. 30-minute up. 2-hour going up. So if these are all aligned, you have an opportunity. Okay, so 5-minute twins, extended hours down here, regular hours down here, 5-minute, 5-minute. So both of these are showing the same data. They're going up, so that's good. Not always the case. Sometimes they're not aligned. And then on the 1-minute, we have a volume confluence on the right side of the momentum as well. We're going down, 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 waiting for an upward signal right there. That's where it is right here. So you enter at the close of the candle, right before the candle finishes, a couple seconds, 2, 3, 5, 10 seconds before. Normally I put my stop loss down here, below the candle, but this is a super large candle, so I put my stop loss up here actually. I had a tighter stop loss. I was using manual trading, I didn't use automated orders, so my partial stop did not hit when the price action came down here. So I just stayed in the trade, and I eventually did take that first full profit target, so that was a good trade. Very good trade right there, wonderful. All of these other vertical lines are trades that I wanted to take, but if it's yellow, it's a trade that I actually did take. But if it's like a different color, I did not take the trade. So going over here, I took another one because 15-minute is now in the red. That's one of our first permission gates. 5-minute, both in the red, and increasing, which is the other rule. 30-minute is just going downward, and that's all right. As long as the 15-minute is in the red and increasing, that gives us permission to take a trade. So look right here. What do you see? A huge candle difference. Huge. Look at all of these volume bars. Now look at this one. Look at the size of this candle. in regards to the average. So this was another entry right here at the close of the candle, stop loss slightly above. I targeted a tighter stop loss. I put my stop loss at the edge of the candle. I didn't go above at any degree. I went right here at the edge of the candle. That's where I went. The price action barely hit it, but it did hit it. So that was a win. 2 trades today, 2 wins. I didn't take any other trades, but it is important to note, just look at the price action for a second. Look at how zigzag, I mean, this is a consolidation. And our important lesson of the day, our important note of the day is we had this volume spike right here when the news from the federal government came out, okay? Huge spike, huge event. This is a time to get data. This is a time to collect and understand and reflect on data. What are we going to learn from this, right? So this came up, hit previous day's high, immediately rejected. You'd think with a candle this strong, so this is there's always manipulation involved as well. There's a lot of things that could be going on, but in either way, we have to remember this for tomorrow. If price action hits previous day's high with this much velocity, this much energy behind it, and then gets denied this hard, we got to keep that in mind for tomorrow. We have to remember this. With all that being said, I'll see you in the next one.